The housing crash is dropping consumer confidence. Let's have a look. Good evening, everyone. Welcome to this episode of Heiser Says. And I'd like to talk about a Reuters release or an update. Souring consumer mood in Australia may prompt RBA cuts soon. So because consumer confidence is dropping, there may be interest rate cuts. Now, one thing we have to realize, interest rate cuts are very, very low in Australia. It's any difference that interest rate cut will have on mortgage repayments or interest savings for people is going to be very, very insignificant in the grand scheme of things. You know, if our interest rates were to, say, go up 1% or double, that will have a big impact. If they're to go down 25 basis points, that's going to have less of an impact. So we've got a lot more room to go up than down. So let's have a read through this. March consumer sentiment worst in more than a year. Pessimists outnumber optimists as index slips below 100. ANZ removes policy rates rise from its long-term outlook. Fiscal stimulus critical for economic growth, ANZ. Before we jump into this article, let's just read a little bit about what consumer confidence is and how it's measured, because we hear about it all the time. And what we'll do is, we can see here that this is the drop that they're talking about. Boom. Boom. That's and I took it over a year. So you can see, and this is the trend line where it's trending down. Which it honestly is no surprise to anyone, who's working on a business. But we'll just read through this here, the explanation of what consumer confidence is, because we hear about it all the time. The Consumer Sentiment Index, CSI, is based on a survey of over 1,200 Australian households. The index is an average of 5 component indexes, which reflects consumers' evaluation of their household fiscal situation over the past year and coming year, anticipated economic conditions over the coming year and the next 5 years, and buying conditions for major household items. The index scores above 100 indicate that optimists outweigh pessimists. This page provides Australian consumer confidence, actual values, historical data, yada, yada, yada. So right now, what are we sitting at? We're under 100. Consumer confidence is not optimistic. The majority of people are less optimistic, and it's trending down. So let's jump back to this article and have a read. Australian consumers have turned gloomy in a 1-2 punch to the economy, already battling a steep property downturn, anemic wage growth, rising the risk of an interest rate cut as soon as next month. I still don't see how that's going to have much impact at all. Slowing global growth and a trade war between the United States and China, Australia's major export market, forced the country's central bank last month to open the door to an easing. That policy U-turn by the Reserve Bank of Australia was underscored by a survey released on Wednesday, which showed the Melbourne Institute and Westpac Bank Index of Consumer Sentiment fall 4.8% in March, unwinding a 4.3% jump in February. So if we just jump back here to this graph, we can see here that it jumped up, so it was below 100, and we shot up, and boom, right back down. Right back down. The index, compiled from a survey of 1,200 people, was down 4% from a year earlier at 98.8, meaning pessimists now outnumber optimists. This sharply contrasts with the cautiously optimistic consumer mood through most of 2018. Well, we have an election coming up, and all likelihood that Labor's going to win. So no wonder most people who are business owners are going to be pessimistic. I'd like to see who the breakdown of those 1,200 people are. The figures come just one day after a closely watched measure of Australian business conditions slipped below the long-run average in February, dragged lower by falls in corporate profitability and sales. The consumer and business confidence surveys confirmed the weakening in the Australian economy lately and pointed to subdued conditions looking ahead, said Diana Mausner, senior economist at AMP Capital. The continued poor data flow in Australia means that the next RBA meeting in April is live, which means that the odds of no change versus a rate cut look fairly even, despite the RBA appearing neutral in its commentary. Despite the RBA's doggedly neutral stance, domestic money markets are fully priced for a 25 basis point reduction in the official cash rate by August. The Australian dollar slipped 0.4% to 0.7049, as the consumer survey emboldened rate doves, drifting towards a recent 2-month trough of 70.30. One reason for the dark mood in the report was a sharp slowdown in the $1.9 trillion economy in the second half of last year, partly due to the housing downturn. So the housing downturn, the housing bust, is slowing down our economy. Now just think, just as a commentary, this morning I did a video about a political party that's proposing all these changes to our economy, and they're still going to invest heavily in all these other things. If we're just seeing the effects of a downturn in housing, could you imagine removing entire sectors for ideological reasons would have on the economy? I don't understand how these people can think like that, put those ideas forward with any legitimacy. But what do I know? We are mindful it may not have taken much additional weakness to trigger an easing from the RBA, ANZ's head of Australian economics, David Plank, said in a note in which he removed a hike from the RBA's long-term rate outlook. Should it look as if the unemployment rate is trending higher, we think the RBA will act quite quickly, he said. ANZ sees the probability of a policy easing as early as May, although its base case scenario is for rates to stay on hold throughout 2020. The RBA is not alone in shifting away from its long-held policy stance. Central banks from the United States to Japan and China have turned more dovish since the start of this year in the face of cooling global growth and tepid inflation. Gloomy media. In Wednesday's consumer sentiment report, respondents appeared to be reacting to data showing the economy slowed sharply in December quarter last year, which many in the media referred to as per capita recession. I've never heard of that term. I don't know if it exists. Fourth quarter domestic gross product expanded at below trend of 2.3% annual pace, highlighting pressure on the economy. The survey data indicates that this has had a significant negative impact on confidence, said Westpac senior economist Matthew Hanson. Responses over the survey week showed a marked drop-off from the National Accounts Update. He said responses collected before the March 6 release had a combined index read of 100.7, while those collected after the release had a combined read of 92.7, a drop of 8%. Well, that is not surprising at all. The fact that, the media, the environment, what people are responding to, psychology has an impact on this assessment, which is essentially a mathematical measure of people's feelings. It's economics. It's not as hard as the other sciences, as much as they pretend it is. It never really is. Economists say fiscal stimulus could prove useful in injecting life into household demand. Okay? The RBA itself has recently noted that successful fiscal stimulus has had during the 2008 GFC, which underlined the limits of monetary policy when the official cash rate is already at an all-time low of 1.5%. So they're thinking of printing more money. The problem is with fiscal stimulus, won't it cause inflation? Fiscal policy is more likely to respond in the short term, City economist Josh Williamson said. One of looming federal election battlegrounds will be wages and incomes policy. Australia's centre-right, I don't think we've got a centre-right government anyway. Australia's centre-right government will deliver the federal budget on April the 2nd, when it is widely expected to announce personal income tax cuts and infrastructure spending ahead of a general election due in May. Well, what do you think? Guys, do you think this is it's an example of the wealth effect, isn't it? That banks were saying they were not to blame for the housing crunch because they made it harder for people to borrow money, even though we're seeing evidence of changes to banks' lending practices affecting purchasing of land in Melbourne. We've got an example of that I spoke about the other day. And here we're seeing that the RBA is suggesting fiscal policy. And the problem is when the government starts pumping more money, spending more money, what are the implications of that? I don't know. It's going to be interesting. Prepare yourself, guys. Consumer confidence is low. You can see here it's trending down. And yeah, I'll keep the updates coming. Please like, share, and subscribe. Ding the bell to see my daily updates. And I'll see you all again tomorrow. Have a great night. Bye for now.